Hello everybody and welcome to a new lesson. In this one I am going to talk about another very important and powerful indicator called Fibonacci retracement and why it is very important to use it in technical analysis. Once you find out why these Fibonacci numbers are so fascinating in trading, you will be amazed of how this indicator works and how you can determine resistance and support level dictated by these Fibonacci numbers. Some of you might have seen Elliott waves, and these waves patterns are all based on these Fibonacci numbers and ratios. And for those of you that doesn't know what Elliott waves are and how they are represented, I'm going to take my Elliott wave tool from my favorite drawing toolbar, and I'm going to represent to you how Elliott waves are being drawn, and I am going to represent this pattern right here so you can clearly see and understand these waves. So it goes like this. This is wave 1, 2, 3, 4, and 5. So for every impulse wave up, it contains 5 zigzags like this. And this whole structure now, it is only one wave. But we will get into detail about Elliott waves in another lecture. And for now, I'm going to delete this and I'm going to draw a line right here. And let's think that this is only the wave 1 of an Elliott wave count. And now, let's take our Fibonacci tool from our favorite drawing toolbar. And we want to get an idea of where is the retracement of this first wave, which will create the second wave of Elliott wave structure. Okay? So we take the Fibonacci retracement tool from over here. And we want to take this lowest point for this first wave and we drag it to the top and click again here at the top to fix it to these specific points. Now that we set our Fibonacci retracement tool, what are we seeing are these ratios and numbers right here. And if we double click at this Fibonacci tool, we open the settings menu. And let's add one more number that it is very important, and I will explain why when we get there. So in this window that popped up, we go to this menu right here where it says style, and let's set our new ratio anywhere at these boxes where is no check mark in front of them. Okay? So I will change this ratio of 3 to 0.65 and I will make it yellow color. And right here at the bottom of this menu, I like to keep the labels on the right and to disable the background because I like to see this indicator very clear. And right here, you have this option called percents, which allows you to see the retracement of the main trend in percents instead of numbers. But keep in mind that it is the same thing and it's just a matter of preference. And I will keep mine in default setting. And now we are done and click OK. Okay, so now that we configured our Fibonacci tool and we fix it for this first wave, let's see what these levels are telling us. On the right hand side, right here, you can see that we have some levels of where this first wave could retrace. And if we read it from the top to bottom, we see these fib regions of 0, 0.236, 0.382, 0.5, 0.618, and the newer one that we added 0.65, 0.786 and 1, which is the beginning of this first wave. So I will draw here another line from this top for wave 1, which will be considered it as a beginning for wave 2. Okay? So let's see how these levels of Fibonacci work and what is the psychology behind them and why are they acting as a support and resistance for the price and candles. So when we start to downtrend, the first level of Fibonacci support is this one in red of 0.236, and this support level will only hold in a very bullish market, only because this wave 2 right here will only retrace 23.6% of this first wave, and this is a very small retracement, but keep in mind that it could make a little bounce of this level and it will only hold in a very strong bullish market. Okay, so the next fib level is this one of 0.382. support region, and this one as well is a level which will hold in a very bullish market, and a more decent retracement level is the 0.5 or 50% retracement, where it will be a stronger chance of a stronger bounce from this fib level. Okay, so now we are at 0.618 fib region, and this one is a very special fib level right here, because this is where everybody in the market wish to enter their buy positions, and this is also known by the name of golden pocket. I am not going to enter in too much detail about this Fibonacci sequence of numbers, but I can tell you this. The golden pocket or 0.618 level from the Fibonacci sequence is a very important and unique region, not only in charts and trading. These numbers from Fibonacci sequence are everywhere in the world, and some of you might don't even know about them. And these ranges are a very beautiful thing, guys. Ranges from the way that architects design buildings, to the way that our bodies are proportional, to the way of how our DNA is formed, and it is measured by this Fibonacci sequence of numbers as well. And these numbers are found everywhere in the universe. But the amazing thing is that they are also found in charts, and they are very, very powerful. And I recommend you to study or to watch a documentary about this sequence of numbers, and you will be amazed by it, guys. So let's get back to our wave 2 retracement, and I was talking about this golden pocket region, and I'm going to highlight it right here to better understand and see of what I'm talking about. And I'm going to take my rectangle and highlight this region like this. And as you can see, this is the golden pocket between 0.618 and 0.65 regions. And this is where almost everyone will hope for to get their buy or positions filled, because it is a very strong region of support. But keep in mind that not always is going to get that far, depending of how bullish, neutral or bearish is the market sentiment at that specific time. This one in blue color is the 0.786 fib region, and if it gets there to this region, you want to consider that the market sentiment is not that bullish, but this one is a strong support level as well, where it could make a bounce to the upside and continue to uptrend starting wave 3 of this Elliott Wave structure. Now the last level is this one right here, where this first wave started, and if it breaks below even with a tiny amount, this first wave will be considered a failure, where wave 2 retraces more than 100% of wave 1, and that is denoted as a first wave failure, and the market will start to downtrend even more. So let's see some examples of how this tool is used and how it works and how the market reacts to those levels. Okay, in this first example I want to show you how Fibonacci retracement works on Elliott Wave structure and how we can use it in our advantage, these Fibonacci ratios, to determine supports and how the market reacts at these specific zones. So let's recap a little about Elliott Waves. We take our Elliott Wave tool, wave 1 to 5, from our favorites drawing toolbar, and we draw it right here, our Elliott Wave count, and it goes like this. We take this first point where wave 1 starts, and we draw our Elliott Waves like this, where this is wave 2, 3, 4, and 5. So for this type of wave structure, we will take the Fibonacci retracement tool, and we want to measure the retracement only for waves 2 and 4. So we start from this low point over here, and we drag it to the next highest point, which is the complete wave 1, and this is how we find the retracement of wave 2. We do the same thing for wave 4, and we start from where wave 2 retracement finishes, and we drag it to the next high, which will complete the wave 3, to determine where will be the retracement for wave 4. And after all 5 waves are completed, we take the Fibonacci tool for all 1 to 5 waves, and we start again to the origin of wave 1, and we drag it to where wave 5 finished. And now this whole structure is only one larger degree wave, and now taking the Fibonacci for all of these waves, we want to find the retracement of the larger degree wave 2. Okay? So let's see how this theory acts on Bitcoin Cash chart. So here we have Bitcoin Cash chart and I am on 2 hour time frame. What are we seeing right here at this chart is this top and this bottom, and these two extreme points are forming the first larger degree wave, and this first wave consists in 5 sub-waves which we are going to find right now and apply Fibonacci retracement only for the waves 2 and 4, which are the correction waves in this structure. I am going to take my Elliott Wave tool from my favorites drawing toolbar, and I am going to draw our Elliott Wave right here. So we see this bottom over here, which will also be the origin of wave 1, where we see the first stop, there will be the ending of the wave 1. Here is the wave 2 because here is the next low. At the next high over here is the wave 3. This is wave 4. And on the next peak we have wave 5. So what we want to do next is to take our Fibonacci tool and start measuring the retracement of wave 2 and 4 to get an idea of where they could retrace. So for the wave 1, we are taking it from the origin point and we drag it to the top of this first wave. What are we seeing right here for this retracement is that it bounced very hard from the 0.5 region or 50% retracement, and we continue making our third impulse wave up. As I mentioned earlier at the beginning of this lecture, these two levels of 0.236 and 0.382 will only hold in a very strong bullish market. And what are we seeing right here is that the 0.236 region was smashed very hard and the bulls are not even defending. The next level is the 0.382, and here as well we see no signs from the bulls. But here at the 0.5 fib level, we see these two hammers forming a tweezer bottom and these two long wicks to the downside, which implies that the bulls are defending heavily against the bears, and they start to regain control and continue making the third impulse wave up. For our fourth wave retracement, we will take our Fibonacci tool from the point where wave 2 ends and we drag it to the next top where wave 3 finishes. And what do we see right here is that the 0.236 fib level hold without a doubt, and we continue to uptrend, finishing our Elliott Wave structure. So now that we see this whole structure of waves 1 to 5 finished, this structure becomes the first wave of a larger degree Elliott Wave structure. And because of that, after all 5 waves are completed, let me delete this for now. So after all 5 waves are completed, this whole structure right here is only the first wave, and I will mark it like this with a trend line. And I am going to annotate here that this is the larger degree wave 1. And now what it will happen next is the retracement of this larger degree first wave, and this retracement will create the larger degree wave 2. So let's take our Fibonacci tool to see where wave 2 could retrace. So we start from this low point over here and we drag it to the highest point right here, and this is how you take the Fibonacci retracement when all 5 waves are completed. Some people are doing it very wrong, and I am going to show you right here how they do it. So we have our Elliott Wave structure 1, 2, 3, 4 and 5, and they take the retracement for wave 2 like this, for wave 4 like this, and it is all good for now. But they make a huge mistake taking the retracement only for wave 5, and that is completely wrong, guys. What you want to do after all 5 waves are completed is to take the Fibonacci for this whole structure, not only for the wave 5. So make sure you don't do this mistake. So let's get back to our chart right here, and as you can see, there is some fighting here between the bulls and the bears at this 0.236 fib level, where we see this pair of hammers, but the bulls eventually lost, and we are heading to the next fib level, which is the 0.382, where we have a little bounce because we found support from the 0.382 fib level and the 55 moving average, but we found resistance from the previous fib level of 0.236 and the 8, 13 and 21 moving averages, and we start to downtrend even more, testing the next level of 0.5, which in my opinion is a more decent retracement, which hold very well, and we start to uptrend. So for now, with all of this information that we have on the chart, we will assume that this is the second wave and this is the beginning of wave 3. So in this example, I presented how you can find retracement in an uptrend, and in the next setup I am going to present you how to find retracement using Fibonacci in a downtrend. For this setup I am using the Litecoin chart and I am on 4-hour time frame. So in the previous example you learned how to take Fibonacci retracement in an uptrend, and now we will learn how to take it in a downtrend to get an idea of how high it could retrace. Now on the Litecoin chart we see here a top and a bottom as well, and let's take our Fibonacci retracement tool from our favorites toolbar, and now we take Fibonacci differently. We take it from the top to bottom because we are in a downtrend and we want to know where it could find resistance in the retracement. So we start from this point over here and we drag it to the lowest point where you see on the chart. Okay, so now that we have our Fibonacci fixed on the chart, we see that it bounced from this region over here and it starts to uptrend, but it found resistance very soon at the 0.236 fib level, where we see this huge rejection from the upside, and that implies that the market sentiment is more bearish now. Some people consider the 0.382 fib region in a downtrend as a dead cat bounce, because if it gets there and if it retraces more than this zero level, this wave going upwards will be considered as a failed wave and the market will continue to downtrend even more. A more decent retracement in my opinion is the 0.5 and 0.618 fib region, where this bounce from over here will be considered a much stronger uptrend, and if it retraces more than 100% to the upside with high volume and conviction, the uptrend will get even stronger and more bulls will rush in to buy this coin and ride the wave up. In this setup, I am going to present you another example of how you can use the Fibonacci retracement in a downtrend and what the market does when it retraces more than 100%. So for this example I am using the Ethereum chart and I am on daily time frame. As you can see right here, we see this top and this bottom, and we are going to take our Fibonacci tool and we want to start from this top over here and we drag it to the lowest point that we see to set our Fibonacci retracement tool. As you can see right here, we hit this bottom and then we started to uptrend and we find resistance at this 0.382 fib level and from the 55 and 21 moving averages, where we see a lot of rejections at these candles, and after that we test again this 0.382 fib level and this time we successfully break it. Here at the 0.5 we see some small rejections as well, but we successfully managed to break through again. At the 0.618 fib level or golden pocket, we see here as well some rejections, but we found support from the 8, 13 and 21 moving averages, and we continue to uptrend close to 100% retracement, where the market starts to lose steam and volume, and we downtrend again, but this time making a higher low, and then we start to uptrend again. So let's look what happened further, and what we are seeing is that the 100% retracement level was broken to the upside and the market continued to uptrend even more to this high over here. So thank you for watching this lecture, and I will see you in the next one, where I'm going to talk about the next tool called Fibonacci extension.